Hi, I'm Jimmy. In this video, I'm going to walk through my top 3 dividend stocks from the industrial sector. Our goal is to find the best dividend stocks from each sector that can give us the passive income that could help us get closer to our goal of achieving financial independence. Now, backed by popular demand in this video, we're now doing our top 3 European stocks and top 3 US stocks. And stick around until the end of the video because at the end, I've actually got 2 bonus dividend stocks that almost made this list. So I guess it's really a top 6 list plus 2 bonus stocks. Okay, now this video is part of a passive income dividend series where we're trying to put together the top dividend stocks from each of the 11 GICS sectors. GICS is short for Global Industry Classification Standards. This is the 3rd video in this series. You can find a link to all the other videos in the description below. So to make this list, well, a company needs to show a history of good dividends. They need to keep their dividend above 2%, or it has to be currently above 2%. And ideally, they have to have at least the potential to grow or at least maintain their dividend. We're using the dividend coverage ratio to prove whether or not they can afford their current dividend level. To calculate the dividend coverage ratio, we simply take profits of the company, divide that by the dividends that they're paying. The result is the dividend coverage ratio. So the higher the profits are or the earnings per share are, well, the higher the dividend coverage ratio would be. Ideally, it has to be over 1. That means that they're covering 100% of their dividend. Everything higher than that is, good for the company. Okay, so our first US dividend stock is the United Parcel Service, ticker symbol UPS. UPS has a dividend yield of slightly over 3%. And what they do is they deliver documents and packages using both ground and air delivery services. Now, this is what their dividends per share look like going back to 2012. And as we could see, their dividend has grown nicely over the past few years, and analysts are expecting for UPS's dividend to continue to climb in the coming years. The green bars are analyst estimates. And when we add earnings per share to this mix, well, we can see that earnings per share, which is the same thing as profit, well, we can see that profit per share has more than adequately covered the dividend per share, which is likely a good sign for the stability of UPS's dividend. Okay, now we jump over to Europe to the Paris Exchange, where we have a construction and engineering company called Vinci, ticker symbol DG. Now, they are one of the powerhouses when it comes to the construction and engineering space. They built the tunnel from the UK to France, and I believe Vinci built the world's longest suspension bridge. So they're supposed to be quite good at what they do. Now, if we look at their dividends, once again, they look quite stable. And as we add earnings per share to this whole thing, well, we can see that earnings per share are doing a good job of covering their dividend per share. And it looks like earnings is growing fast enough that I would expect to see decent increases in Vinci's dividend over the coming years. So I would expect for their 2.5% or so dividend yield to be fairly stable over the next couple of years. Okay, now we jump back to the US. So our next dividend stock is Illinois Tool Works, ticker symbol ITW. ITW has a dividend yield of almost 2.5%. And basically, what they do is they design and manufacture fasteners, equipment, adhesives, tools, specialty products, things along those lines. And when we look at their dividends, well, we can see that their dividend per share has been fairly consistent, and their outlook also looks like it will continue to be fairly consistent. When we add earnings per share to this, once again, we can see a very similar story. So overall, I'm a big fan of Illinois Tool Works' dividend, and I expect for them to remain fairly strong over the next few years. Okay, next we head back to London, or we head over to London, where we have Babcock International, ticker symbol BAB. Now, BAB has a dividend yield of more than 5.5%. And as we can see, both their dividends and then when we add earnings per share to this, well, both look fairly stable. And we can see that profits do a good job of covering dividends, which is likely a sign that Babcock's dividend will remain fairly stable over the coming years. Now, what Babcock does is they focus on 3 different places. They have the defense, which is when the military buys things from them. Then they have emergency services, which is when places like firefighters, things like that, buy different things from them. And then they have their civil nuclear division, which they're decommissioning some nuclear power plants. I believe they're building a new one. They offer operational supports to some other ones. So I believe they have a lot going on in that area on sort of every aspect of nuclear. So overall, I would expect their business to do quite well over the long run, and I would expect for many of their revenue streams to remain fairly sticky, as many of their customers are likely to stick with them for a long time. Okay, now we jump back to the US, where we have the Eaton Corp, ticker symbol ETN. Eaton has a current dividend yield of slightly more than 3%. And what Eaton does is they manufacture products in the industrial, construction, commercial, and aerospace markets. And when we check out their dividends, well, here we can see that dividends have been quite good over the past few years. We add earnings per share to this, well, we can see that overall, it seems that earnings per share are more than capable of continuing to cover their dividend. And I would also guess, thanks to the stability of much of their revenue, that I would expect for their dividend per share to continue to climb, at least for the foreseeable future. Okay, next up, we jump back to London for our final stock, and then we're going to touch on our 2 bonus dividend stocks that almost made this list. Next up, we have Bunzl, ticker symbol BNZL. Bunzl has a dividend yield of just short of 2.5%. And what Bunzl does is they sell products to businesses that aren't typically sold by those businesses. So as an example, they're one of the largest sellers in the world of plastic and paper bags that many stores use. So if you were to go to a grocery store and you get plastic bags at the end, or when you're checking out, or paper bags, Bunzl's likely to be the seller of those bags. When we look at their dividend per share, well, we can see that they've been climbing fairly nicely over the past few years. Then we add earnings per share to this, and we can see that the dividends appear to be fairly safe, and I would expect for them to at least be able to maintain their current dividend level, possibly increase it. Okay, now for the 2 bonus dividend stocks that I wanted to include, but kept them out for one reason or another. The first one is Waste Management, ticker symbol WM. Now, I'm actually a big fan of Waste Management, and if you've been following the channel for a while, I've mentioned it once or twice in the past, and I would have included it in this list, but right now their dividend yield is slightly below 2%, which is what I was limiting my search to. I was hoping they were going to make this list, but because the dividend was below 2%, we kept them off. Then I considered adding Boeing to this whole thing. Now, I've done a few videos on Boeing in the past, and over the long run, I would expect for Boeing stock to do very well. I like their dividend per share, and the reason I kept them off this list is if you look at their earnings and dividend chart, well, we can see that earnings per share has dipped lower in 2019, and this sort of violated the initial setup that we had for this list of finding stocks that had good dividend coverage ratios. I expect for them to have good dividend coverage next year and possibly the years going forward, but this year they sort of violated, so I kept it off. Now, if we're nervous about a stock market crash, I actually did a study where I looked through the S&P 500 stocks over the past few recessions to see which companies performed the best. So if you're curious to find dividend stocks that have performed well in market crashes, this is a good next video that you might be interested in watching. There's a link here. There's a link in the description below. So thank you so much for sticking with me all the way to the end of the video. I really appreciate it. Don't forget to hit the thumbs up and the subscribe button. Thank you, and I'll see you in the next video.